love the channel and find it useful in becoming a happy retiree. Subscribe today. Good morning. Welcome to Money Matters. Talking about Washington in the driver's seat, at least for now. And again, there are periods of time when Washington picks up its gravity and its impact on Wall Street, but I can't remember a time where there is more Wall Street's hanging on every word or every tweet coming out of Washington. In March and April, all movement came from the White House for the most part. And this is for good days and for bad days. So of course you remember the days where you get a net message from Trump. He talked about tariffs. Tariffs have become a cattle prod for averages. If he's saying yes on tariffs, we're going to do more and more of them, markets down. Then we get retaliation from China. They're going to do more tariffs in response to our tariffs. Then markets move down even more. How many days have we seen that over the last couple of months? Then you get the new economic advisor to the president, Larry Kudlow, who come out, who's wonderful on TV, very Wall Street friendly, knows how to calm everybody down. He says, look, they're not going to have a trade war. No way. No big deal. Markets go back up. Then, without anybody knowing about it, Kudlow doesn't even know about this. Trump will say, you know what, let's look into another $100 billion worth of tariffs. Scary number. Markets back down. And the cycle has been fascinating, and Washington is in control. They have been in control of what's happening on Wall Street. Even with Facebook, this week, Facebook, of course, we know about the current problems, Cambridge Analytica data breach. It goes all the way back to the election. It goes back to politics. Mark Zuckerberg testifies for 2 days on TV, 2 straight days in front of Congress at the center of politics. The entire tech sector hanging on every single word in front of Congress. Again, Washington in control. Then you get Xi Jinping comes out and says, hey, China is open. China's going to reduce tariffs on one of the main things that we've been mad about for so many years. They're going to reduce tariffs on U.S. cars sold in China. In markets here in the U.S., they go back up. Geopolitics, Washington in control. This week, markets up, let's call it about 2%, not quite. Approximately 2% on the idea of compromise and the idea of a trade spat staying a spat rather than escalating to a trade war. And that, of course, is the real worry, right? We know that if this stays effectively a fight between 2 9-year-olds, nobody really gets hurt. They slap each other. It's not until you get these heavyweight blow-by-blows that it really impacts the U.S. economy. And that, of course, is what markets are scared about, not the initial back and forth. It's what will happen if this escalates or gets worse. The stock market, like this week, all of a sudden now China's a little bit more open. Maybe things won't escalate. Markets up 2%. Bond interest rates crept a little bit higher. The 10-year Treasury is now just above 2.8%, meaning that you get, anytime we see interest rates start to creep higher, it means that there's a little more risk appetite out there. It means that, hey, I want to buy stocks. I don't want to own bonds as much as a whole. Rates go back up because bond prices come down. Stocks go back up. I can't help but to think back to the dinner scene between Trump and Xi Jinping. Trump, remember this scene? Trump is on the phone, and I think this may have been, I don't remember if it was Mar-a-Lago or where it was, but it was at a kind of this stately type of dinner where you've got all these big tables. Trump is sitting there with Xi Jinping. Trump's on the phone. Remember this coverage? Oh, took a phone call while he was at the dinner with the president of China. They're all sitting around, they're drinking, Diet Cokes. They're all they said, probably to each other, right? If you really listen to the conversation, it's probably like something like this. Trump says, hey, let's do some public arm wrestling around trade. I'll slap you with a few tariffs. You guys slap us with something good for the headlines, right? Something like you're going to tax Harley Davidsons or maybe Kentucky bourbon. And everybody will be able to latch onto that, and maybe even some soybeans. And then I'll threaten to hit you even harder, and then you concede and you take tariffs down on U.S. cars. And then everybody's happy. And that's exactly what has played out. I can't help to think this whole thing was already talked about over 2 Diet Cokes. Now, let's put some context, though, back into trade. There have been approximately $82 billion in potential tariffs announced thus far. And that's the actual economic impact, not the headline number. Remember, we say $100 billion worth of products, it doesn't mean it's $100 billion. It's $100 billion worth of products, and then you're going to apply a tariff rate anywhere from, let's call it 15 to 25% on those particular products. So you've got to look at the actual cost. It's not the headline number. But if you look at the actual tariff cost, right now we're looking at approximately $82 billion, if you go down line item by line item, of cost on the potential tariffs announced thus far. That's not an insignificant number. That's not an insignificant number, but I want to put it into context. Number one, tax cuts passed last year that are impacting this year, 2018, estimated to add $200 billion back to the U.S. economy. Let's not forget that. Number two, this year, because of tax reform, repatriation of foreign cash, money coming back into the United States, estimated to be $500 billion. So right now, let's get the tally. $200 billion in tax cuts, U.S. That's personal and corporate, $500 billion coming back in repatriation, and then infrastructure spending going up by another, call it $100 billion. That's $800 billion in stimulus for the U.S. economy this year versus $80 billion of potential cost for tariffs. $800 billion versus $80 billion. Do you understand what I'm saying here? We're talking about, we're nervous and worried about 80, and nobody's talking about the $800 billion of stimulus that's come into the economy this year. We've got to put all of this in context and understand really what it means for markets. What we're talking about today is just a political culture that is driving Wall Street. What comes out of Washington, what comes out of the White House, what comes the geopolitical events, particularly right now. Yes, we just launched these surgical airstrike attacks on Syria. Will that have a big market impact? Probably not. But what does have an impact when it comes to the economic fallout of a political decision, of course, has to do with the topic of the quarter or the last couple of months. It has to do with trade. We're back and forth. The more we talk about a trade war, the further markets go south. The more it looks like we have a trade war that is alleviated and turns into or stays just a little spat, the better the market does. And that's exactly what we saw this past week. President of China, Xi Jinping, says, look, China is open for business, and we're going to reduce tariffs on U.S. cars selling here in China. And that all of a sudden sends a message that maybe this just doesn't get it, this stops escalating. And it also looks as though like Trump is getting something that he wanted. And China still looked tough because they imposed some tariffs back on us. So maybe, just maybe, we're in a scenario where politically everybody wins, and now we can put this to aside and we move forward from here. Is it that simple? Is it that easy? Probably not. But I also still don't think that we escalate into a massive trade war. Never thought we would to begin with. And the key here, of course, is that we've got to put it in context of all the back and forth. All the different, all the different talk and all the different measures that we've taken and they've taken. Right now, $82 billion worth of potential tariffs here in the United States versus we know, and those are all maybes. That none of that is taken effect, or maybe not even will take effect. What has, though, we know for sure, is the $200 billion is going back into pockets of companies and individuals in America because of the tax cuts. Number two, repatriation of foreign cash, $500 billion coming back into the United States. And number three, infrastructure spending to the tune of an extra $100 billion. Add those three up, you're talking about $800 billion, almost $1 trillion of stimulus. And listen, we're a $20 trillion economy. A couple $billion has no meaning. But now we're talking about $800 billion. It's a big deal. It's a very big deal. And we've got to put that in context of that is positive economic activity, good, technically good, theoretically very good for equity stocks, and $80 billion of maybe impact negatively from the trade side. see where I'm headed here. There's a lot more to the good happening for the United States economy coming out of Washington, because of Washington, at least at this point, than not. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.